Hello and welcome to this week's edition of World of Business, your weekly guide to trending business news and latest developments on the stock market. We also get to cast a spotlight on thriving but unsung entrepreneurs on this show. The name is Bruce Chibunde, and let's get straight into the business of the day. Economists have applauded the government's tight monetary policy stance, saying that it has subdued inflation and anchored exchange rate stability. For more on this, join us in this discussion in the second segment as we get to delve into it. But first, we get to give you the exchange rates as of today.
Rate was at 26.77 ZiG. The Zimbabwe Gold to the Great Britain Pound interbank rate was at 34.57 ZiG. The Zimbabwe Gold to the Euro interbank rate was at 28.88 ZiG. The Zimbabwe Gold to the South African Rand interbank rate was at 0.69 ZiG. And lastly, the Zimbabwe Gold to the Botswana Pula interbank rate was at 1.95 ZiG.
We also give you commodity prices on the global
as of today, where gold per ounce traded at $3,146 after it went up by 0.01 percentage points. Silver per ounce traded at $34.38 after it went up by 0.19 percentage points. Copper per pound traded at $503.65 after it went up by 0.03 percentage points. And lastly, platinum per ounce traded at $978.60 after it went down by 1.06 percentage points.
That's it for the first segment. World of Business takes a short break, and we'll be right back. Welcome to the second segment of World of Business, where we're discussing reactions from economists on the government's tight monetary policy stance. That has subdued inflation and anchored exchange rate stability. To help us unpack this, I'm now joined by Mr. Persistence Gwanyanya, who is an economist and a member of the Monetary Policy Committee, MPC. Mr. Persistence Gwanyanya, how are you doing? And welcome to the program.
Thank you for having me on the program.
Zimbabwe's monthly consumer inflation rose to 10.5% in January 2025, a significant jump from 3.7% in the previous month. To what can we attribute this sharp spike in inflation during this period?
Zimstats attributes the increase in ZiG inflation in January this year to increase in rentals.
Okay.
Logically, because normally rentals are adjusted at the beginning of the year.
Okay.
We experienced a spike in inflation last year in October.
Yeah.
And one would want to assume that the rentals were only adjusted at the beginning of the year.
All right.
And which could be the reason why inflation spiked in January.
Okay.
Rentals constitute, I think, a proportion of 6.3 percentage points in terms of their contribution to ZiG inflation.
All right.
But
allow me to ask, like the ordinary citizen who's tuned in, when you speak about rentals, can you simplify is to say what exactly are you talking about so that our viewers out there who perhaps are not more informed about this kind of language can better understand?
So rentals in terms of the office spaces, rentals in terms of the real estate, that is the houses.
The houses, yes.
Yes. Normally, the rentals are in US dollars, in US dollar terms. But as the exchange rate depreciated in October, you would have expected, along with other adjustments in the prices,
All right.
the rand house to also increase in ZIG, reflective of the exchange rate depreciation. But because of the nature of rand house, the contracts would have been negotiated for the year. They are normally negotiated
Again,
renegotiated at the beginning of the year. So the exchange rate effect that happened in October,
Yes.
where our exchange rate depreciated by a significant amount,
All right.
would then be expected to reflect in the January rand house.
All right.
And this is why
this accounts for that spike.
the inflation,
All right.
and this is what explains largely the rise inflation, ZIG inflation, in January this year.
All right. Previously, speculative behavior amongst other parallel market activities are some of the reasons the local currency struggled to maintain a tight grip on the economy at the mentioned time. What measures were put in place by the government through the central bank to ensure that we have stability and restore confidence in the local currency?
Admittedly, our local currency was unstable, volatile, prior to the introduction of the ZIG
All right.
currency. But on account of how the ZIG is structured, and also on account of the monetary policy measures to support ZIG, we had seen general stability in the economy, save for the brief period I've talked about, maybe between August and October,
Yes.
when major interventions were then done by the central bank to stabilize the currency.
Yes.
But the environment has remained a very stable environment.
All right.
And up to today, you may want to agree with me that since the third quarter of 2023, that is of 2024,
24 rather, yeah.
that is since October 2024 to date, our exchange rate has remained stable. Even the premiums, the parallel market premiums, have remained very low. They continue to reduce.
You talk about the policies that have been. Could you, from the top of your head, could you please perhaps give us a few of those that perhaps have contributed to the stability that we enjoy?
So the tight monetary policy stance that was taken by or anchored by the central bank includes the interest rate policy,
All right.
which was maintained at 35% from the 27 September
All right.
level that the Monetary Policy Committee resolved.
Yes.
That is the 35%.
All right.
So at 35%,
you talk about that interest rate.
Yeah,
What
at
effect?
35%, the interest rate is seen as positive or
right.
real positive interest rate.
All right. You of course have said that. What effect did it have on the currency stability?
So
that
a
is the
positive
interest rate. Right.
real interest rate is the effect of curtailing
All right.
excessive monetary expansion
All right.
or excessive money creation.
All right.
Banks create money through lending.
All right.
So if there is excessive lending, it spills over to monetary expansion.
All right.
So what a high interest rate, positive real interest rate does is to discourage especially consumptive borrowing.
Which is
And
also
this
perhaps viewed
consumptive
as
borrowing,
unproductive borrowing.
unproductive borrowing is what has been driving our exchange rate
All right.
volatilities in the past.
In the past, all right. According to Zimbabwe National Statistics Agency, ZimStat, the March-weighted month-on-month inflation rate was 0%, shading 0.3 percentage points from the February rate of 0.3%. What can this positive development be attributed to?
It is attributed to the continuation of the tight monetary policy stance. So I have spoken about the interest rate policy. There is also the reserve ratio, which is another monetary policy tool that the central bank has been using to contain monetary expansion or growth in money supply. So the statutory reserve ratio has been maintained at 30% for the ZIG and 15% for the US dollar, which speaks to a tight monetary policy stance, in that for every dollar deposit in the account, every ZIG deposit in the account, 30 cents is to be kept at the central bank as a statutory reserve. And what that does is it reduces the capacity of banks to lend and therefore create money, with a similar effect as the interest rate policy. So a combination of a positive real interest rate policy and a higher statutory reserve ratio has produced conditions of tight monetary policy which have supported stability that continue to show in the economy. And we expect that with the continuation, despite what could be some consequences in the economy, which I'm sure the central bank is aware of.
And what are some of those consequences that you speak of?
A tight monetary policy stance may have the effect of affecting the capacity of banks to lend even to the productive sector of the economy.
So would that perhaps result in
the mitigating
of the
effect would be the introduction of the TSF, which is the targeted finance facility by the central bank, which targets mainly the productive sectors of the economy, or those businesses in the productive sector value, in the production value chain, to support them with the financing need. So it's targeted in nature,
which has
so
also
it doesn't
started
spark
to
inflation.
include also members, businesses that are operating in the retail sector, if I'm not mistaken.
So the retail sectors, whereas the targeted finance facility was widened by the central bank, I think, on the monetary policy statement, the retail sector, which were evidently showing some signs of corporate stress or some signs of stress, were then included in the targeted finance facility. But I'm sure the central bank is also working on challenges that...
With regards to the retail sector, have we started to see the results already?
We have started to see some life in the return to life in some of the stressed retail businesses. And we expect that to continue on account of the improvements that the central bank will continue to do on liquidity, but also importantly on the targeted finance facility. I'm sure there are some improvements that the central bank is also working on to widen the accessibility, increase the accessibility of the targeted finance facility.
Okay. The World of Business takes a short break, and we'll be right back in the third and final segment. Welcome back to the third and last segment of World of Business. And of course, I'm still with Mr. Persistence Gwanyanya, who is an economist and a member of the Monetary Policy Committee, MPC. As we are unpacking the recent positive statistics released by the Zimstats, highlighting the drop in ZIG inflation figures. Mr. Gwanyanya, thank you for staying with us. The Reserve Bank of Zimbabwe's tight monetary policy stance has anchored price and exchange rate stability across the market. To what extent can we hope for de-dollarization in the near future as our currency continues to stabilize?
I think stability is a precondition to de-dollarization, as it affects the acceptance, usage, and of our local currency. So as our local currency is widely accepted and used, we expect the ratio of the local currency to US dollar to also increase. But more importantly, we also need to drive the demand for that local currency. Other than through the tight monetary policy stance, which is a supply factor, there's also need for the demand side to be very strong. We need robust demand for our local currency. Our Ministry of Finance has already indicated that going into 2025 and beyond, they will be driving the demand for the local currency. They've already started from October 2024. The law to have our QPDs, quarterly payment dates, which is income taxes payable 50% in local currency in ZIG and 50% in US dollar, has been put into law, and that has been driving also the demand for the local currency. We continue driving the demand for local currency, and together with other measures that are in the pipeline are expected to produce increased demand for local currency and support permanent stability of local currency, which will then support the efforts to de-dollarize or de-dollarization efforts.
Economists have raised issues to do with the ease of doing business in order to promote competitiveness. What is your take on that?
Which speaks to the need to address some of the environmental factors which admittedly need to be looked at. So the ministries, the responsible ministries, respective ministries, I'm sure are in discussion or have been discussing with different industry bodies and players to address issues relating to even the tax regime, issues relating to other administrative fees or fees relating to the registration of business or the cost of just operating businesses in Zimbabwe. And we have seen the Minister of Finance has actually hinted that going into 2025, I think from the second quarter of the year, they will be intervening to address the issues relating to the charges and the cost of operating business in Zimbabwe.
Taxes have been cited as the major contributor to this high cost of doing business, which affects many other sectors such as the agricultural sector and important sectors such as the fuel sector. What is the government doing about the issue of taxation?
Which is what I have indicated, that the Ministry of Finance is indicated that they are going to be reviewing the taxes during the course of the year.
Do we have anything that is happening at this point in time, or we are waiting for the second period?
So we're waiting for the reviews from the Ministry of Finance. as they have indicated.
So that's a bit of
But
a process.
you always want to agree with me that it has to be a process.
All right.
Because unwinding the positions already taken may not happen as an event, but it may have to happen as a process. They have already taken some positions. They have to unwind those positions to accommodate the new policy
But
regime.
we are rest assured that work is being done to
yes,
remedy that.
Yes, but in the meantime, I think the stability currently obtaining in the environment is a big relief to businesses. Yes.
Okay, all right. The RBZ's tight monetary policy stance has anchored price and exchange rate stability across the market. What more measures should we expect to look forward to in the next perhaps monetary policy statement?
So I think the Reserve Bank has done significantly well in terms of what is within their purview. Clearly, there is also need for the fiscal leg to support the efforts from the Reserve Bank.
All right.
So fiscal leg in terms of the demand for the local currency. So tightening of the ZIG, what it delivers is it also reduces the supply of ZIG, and therefore the extent to which that supply drives exchange rate volatilities.
All right.
But there is the rejection effect, which would normally be taken care of or remedied by the demand for the currency.
All right.
So what that rejection effect does is, despite the tight monetary policy stance, and on account of the operation of the multiple currency regime, there's nothing that stops a business from just rejecting the local currency in favor of the foreign currency. But that rejection effect would be cured by a robust demand of the local currency. So robust demand of local currency or the use case for the local currency is normally driven by the government. So in terms of...
So is this perhaps in tandem with the initiative to ensure that we encourage formalization of the informal economy and to also ensure that they're given POS machines so that they also start to trade in the local currency?
Which is part of it. And but we also want significant demand to come from taxes, to come from other user fees, and to come from even duties, which is the demand for the local currency. And this is what the Treasury has promised the market, that they are reviewing the tax regime, but they are also coming up with other measures to drive the demand for the local currency. But as that happens, which is within the purview of the central bank, we have already indicated the increased use of the local currency through a regulation that requires every business to operate a POS equipments, and we are also encouraging the usage of our local currency.
So, Mr. Gwanyanya, what is the outlook of the inflation rate as we go forward?
Yeah, it is important to underscore, to emphasize that from April this year, when Zimstats is starting to release annual ZIG inflation figures, we expect inflation to peak, annual inflation to peak. We expect a significant jump in annual inflation as a result or on account of the base effect. And this is just technical. It's technical in the sense that in October 2024, our inflation peaked at 37% ZIG inflation.
All right.
But on account of the major interventions of Reserve Bank on the currency, we saw currency depreciating by close to, I think, around 43%.
Which is a significant improvement.
So
indeed.
we expect that inflation would continue to be elevated from April to October. But this does not reflect the realities on the ground.
All right.
Realities on the ground will remain as this environment we are currently experiencing.
All right.
But that pickup in inflation is only reflective of a technical development that happened in October 2024.
Unfortunately, our time has run out, Mr. Gwanyanya. Thank you very much for taking time out to come and have this conversation with us. We hope again to call you back in the studio so that we can discuss more about this as the year progresses. That's it for this week's edition of World of Business, where we were looking at the reduction of inflation figures in Zimbabwe, a positive development following the tight monetary policy stance that was introduced by the Reserve Bank of Zimbabwe. Until next time, have a pleasant